Hi, welcome to September and the Huntsville-Madison County Real Estate Market Report. This month we're going to talk about the two questions I get asked in every real estate conversation. From buyers, they want to know are mortgage rates going higher? From sellers, they'd like to know are home prices going lower? Let's take a look. Hi, this month we're addressing the two questions I hear every time I talk to someone about real estate. Buyers are wanting to know, are interest rates going higher? Sellers are wanting to know, are home prices going lower? Let's take a look. We're going to start by taking a look at mortgage rates. Now this year, mortgage rates have been the story. You know they have gone up rapidly since the beginning of the year. If you remember, about a month or two ago, they actually went over 6% right in this time period here. And that's when I said that I thought that might be a short-term top. It may turn out to be a long-term top because it looks like mortgage rates are at least stabilizing somewhere in this 5% range. Now, throughout history, as we discussed, in a recessionary period, interest rates are going to go up at the beginning of the recession, and then when the Federal Reserve has to reverse course and start lowering rates to stimulate the economy that they just killed, rates are going to start going down. And actually, mortgage rates are going to start to decline before the Federal Reserve stops raising their benchmark interest rate. So that's exactly what we're seeing right now. In a recession, that means falling mortgage rates. And if you look at the last 6 recessions that we've had, that's been the case every time, and we expect that to be the case this time as well. These are updated mortgage rate projections from our major services. And you can see that the average is hovering in the 5% range, and that's where we expect mortgage rates to stabilize over the next year. Now, mortgage rates are expected to fall to 4.5% in 23, according to Fannie Mae. And after the end of a summer lull that was caused because buyers were shocked by this rise in interest rates in a short period of time, we do expect these mortgage rates to stabilize. That means that we will have buyers returning to the market, and there's a potential for a much stronger housing market in the fall. The important thing for buyers is to marry the house and date the rate. If your rates are high, you will have an opportunity over the next few years to refinance at a lower rate. Rates are cyclical. They go up and they go down. So we're on an upswing right now. So wherever they peak out, they're going to at some point turn around and go down again, and that will give you an opportunity to refinance. The house that you want or need may not be there in a year or two. So it's not a good idea for you to put your house buying on hold waiting for a better interest rate. Purchase the home that you can afford, and then when rates are more favorable, you can look at a refinance. Now, as if you're a seller or if you're a buyer and you're wondering about home price appreciation, we know that price appreciation is tied to our inventory. And we've been talking about low inventory for years. Inventory has started to increase at the beginning of this year, as represented by these green lines since January 22. But as we've mentioned many times, we're still in a seller's market because in order to be in a balanced market, we need about 4 to 6 months worth of inventory. And nationally, we're up to about 3.3 months worth of inventory. Here in the Huntsville-Madison County market, we're less than 2 months of inventory. So we have even less of an inventory market here than they do nationally. As far as prices or inventory is concerned in our market, these are existing homes. Pre-pandemic inventory was almost 1,600 existing homes on the market. Today we have 551 existing homes on the market. So we have about a third of the inventory of existing homes on the market today that we had before the pandemic started. Inventory is still historically low. As you can see from this chart, we are up 26% from last year, but we're down 5% from 2 years ago, and we're down 42% in inventory from our pre-pandemic levels. So still a very seriously low inventory. In Madison County, we still are in a buyer's market. This market index tells us that we're in a seller's market. We're rating at 57. We have to get all the way back down to 30 before we convert back over to a buyer's market. Between 30 and about where we are now is a neutral market. You remember a few months ago, early in this year, we were pegging this out as 100 when the market was moving very fast. This particular index shows us the velocity of our market here in the county and tells us what to expect as far as pricing. Appreciation is slowing for sure, but home prices are not depreciating. You're going to have to pay attention to the headlines when you watch the news or read your articles, because they're going to talk continually about slowing appreciation or deceleration, but not depreciation. These are the year-over-year returns for this year. They're still seeing in the teens nationally, but prices are not depreciating. Price deceleration doesn't mean home depreciation. So that's what you're going to have to pay attention to on these news articles. In Madison County, we're at about 7.7% appreciation year over year, 5% appreciation year to date. We've mentioned many times that our market is pegged to a price per square foot. Everything that we do here in our real estate market is price per foot. So I use that metric to determine how our prices are moving in our county. If we just used the listing prices or the median sales price, that's going to be dependent on the size of the home, and it's much more accurate to take a look at the price per foot that we're getting for those homes, because that's how we price up property. So we're 7.7% year-over-year gains in Madison County. Now, the experts have raised their home forecast for prices for the rest of the year. This chart shows where they started in January and where they just updated in August as far as home price appreciations on a national level. And you can see they're all positive, all significantly positive. If we average them all together, they're going to average about 11% appreciation expectation for 22. I don't think we're going to get that high here in Madison County. We're at 7 now. We're about 2/3 of the way through the year. We could possibly get to 8 or 9% appreciation for the year when it's over. What's ahead? Annual price home growth slowed for the 3rd consecutive month. This is deceleration, not depreciation. But it remained elevated at 15% nationally. 30-year fixed-rate mortgages neared 6% this summer, which we looked at. Some home buyers pulled back. A lot of home buyers pulled back, especially first-time home buyers who are buying homes based on a payment, a monthly payment. Because the home that they were looking at, when rates doubled, they could not afford that monthly payment anymore. So they had to look at a lower-priced home. But that did ease an overcrowding in the market that we just could not sustain. There were just too many buyers chasing too few properties. Looking ahead from CoreLogic, they expect the housing market to start balancing out, with year-over-year appreciation slowing to 3.8% by 23. Year-over-year appreciation slowing. There's no mention of depreciation here in home prices. You remember we've said many, many times you can't have significant price depreciation if you don't have enough inventory to sell. If you're thinking we're going to have a significant market crash in home prices, if you're looking back to 2008 recession, you have to remember at that point in time we had 10 or 12 months worth of inventory in the market. Today we have nationally 3 months of inventory and locally less than 2. This is from Moody Analytics. I don't think national housing prices will decline in a meaningful way, but there will be some price declines across the country. And this is a nice map to show you where these markets got really overheated and where you can expect to see some price depreciation over the next 6 to 12 months, primarily on the West Coast, the Northwest, and the Northeast. As you see these areas in orange and red, which are typically the markets that are more volatile than the market that we have here in Madison County. We have a lot of good resources tagged for you in the description below. If you're thinking about buying or selling and we can help you in any way, please reach out. Let's go out and make it a great day.
Oh.